Look at Part C. Part C says Madarax Limited is an e-business company that trades solely over the internet. In the year 2023, the company made sales worth 15 million shillings. All sales were on 30 days credit to commercial customers. Extracts from the company's most recent statements of financial position relating to working capital are as follows: trade receivables, trade payables, bank overdraft. Additional information. 1. In order to encourage customers to pay on time, Madarax Limited proposes introducing an early settlement discount of 1% for payment within 30 days, while increasing its normal credit period to 45 days. Number 2, it is expected that on average 50% of customers will take the discount and pay within 30 days. 30% of customers will pay within 45 days, and 20% of customers will not change their current paying behavior and will pay within 60 days. 3. Madarax Limited currently orders 15,000 units per month of product P, demand for which is constant. There is only one supplier of product P. The cost of product P purchases over the last year was 540,000 shillings. 4. The supplier has offered a 2% discount for orders of product P of 30,000 units or more. Each order costs Madarax 150 shillings to place, and the holding cost is 0.24 shillings per unit per year. 5. Madarax Limited has an overdraft bank facility charging interest at the rate of 6% per annum. Assume 365 days in a year required. Roman 1. Calculate the net benefit or cost of the proposed changes in trade receivable policy and comment on your findings. 6 marks. Roman 2. Using suitable computation, determine whether the bulk purchase discount offered by the supplier is financially acceptable. Comment on the assumptions made in your computation. 6 marks. All right. This is where there was a bulk of marks. The one we did is just 4 marks. The theory one is 4 marks. Here we need to score 6 marks. 6 marks. C, Roman 1. Net benefit or cost. Net benefit or cost is equal to. If you get this one right, then the problem is half solved. Abraham says net benefit is equal to current policy minus proposed policy. Humidity says net benefit is equal to current policy minus proposed policy. And that's how the examiner caught students off guard. Almost all questions on working capital on trade receivables, the examiner gave, if you look at the past papers, the examiner always gives details on the current policy and the information on the proposed policy. Then candidates are required to calculate the difference, to get the difference. What is the benefit of the cost, the cost of the current policy and cost of the proposed policy. Then you check if the net is positive or negative. But you see, this one was a bit unique. The question was unique because there is no specific information on where you could have current policy and proposed policy. And if you are keen, you would realize that Roman 1 required candidates to calculate the net benefit or cost of the proposed changes. It is net benefit or cost of the proposed changes in trade receivables. But previously, if you look at the other questions, it's not specific to trade receivables. Trade receivables, if you read the other questions, past paper questions, trade receivables is just one element in calculating the cost of proposed and current policies. We always have trade receivables where we calculate the opportunity cost of holding, of having trade receivables or debtors. What you are writing here is what we have done in previous past paper questions, but this one is unique. It is net benefit or cost of the proposed changes in trade receivables. It's specific to trade receivables. But what you are writing here is when you are looking at the whole policy. Here is a benefit related or cost related to trade receivables. But when you say current policy minus proposed policy, you have in your mind the whole policy. But this one is related to trade receivables. Do you understand? Have you understood what I've said? Have you understood that point? You need to read the question clearly. The question is net benefit or cost of the proposed changes in trade receivables. If the net benefit or cost was to be determined in relation to trade receivables only, then you need to narrow down to information related to trade receivables in the question. You understand? Because the question is specific to trade receivables, and therefore you need to, when analyze the question, you need to identify what information are you given that relates to trade receivables. And you can see in note number 1, it reads, in order to encourage customers to pay on time. That is the information we are going to use because that information relates to trade receivables. And trade receivables, by now you should know, are just debtors, customers, those who that owe the business, those who buy from the business on credit, is what we are referring to as trade receivables. So additional information number 1 will be useful. Then additional information number 2 reads, it is expected that on average 50% of customers. So number 2 will help us in calculating Roman 1. But look at note number 3. Look at additional information 3 says, Madarax Limited currently orders 15,000 units per month of product P. Orders. So that is irrelevant to Roman 1 because here, if it is ordering, we read further, there is only one supplier. So that information will not help us in calculating Roman 1. The same will happen to additional information number 4. The supplier has offered a 2% discount for orders of product P. So that information will not help us in calculating the net benefit or cost in Roman 1. Okay. So, what is the formula? Calculate the net benefit or cost of the proposed changes in trade receivables policy. It is a trade receivables policy. So what are the changes? There is a way that this company has operating. But the company is now considering making changes in the trade policy. This company has been selling on credit to its customers, and we've given the amount of trade receivables is 2,466,000, and all sales were on 30 days credit to commercial. 30 days. That was it. Those were the terms. Pay within 30 days. That is the debtors collection period. The company is considering changing that, what now we are calling trade receivables policy. And we have read in note number 1 of the kind of changes the company wants to introduce. So I'm asking, what benefits do you think this company will enjoy as a result of the change in the trade receivables policy? Because we need to calculate the net benefit or cost. And Vincent has said that customers will pay early as per required. That is correct. The reason why the discounts are being allowed, the company is introducing a discount, 1% discount. The purpose, even the question answers what I'm asking. It says, in order to encourage customers to pay on time, proposes introducing an early settlement discount of, right? Let me hear from Humidity. Says, because of the discount, they take advantage, thus they pay early. Similar to the other answer, they pay early. Now, when customers pay early, that is a good thing, is it not? Yes, it is a good thing, because when customers hold the company's money for a long time, there is the opportunity cost associated with customers holding your money. It's like you've advanced them money. If someone is holding your money for 30 days, for 45 days, that money would have used it to do something else, which you are not doing. So that's what we are referring to as the opportunity cost. So by giving this 1% discount, the objective is to entice, to motivate, to cause the customers to pay early so that they take advantage of the discount. Do you understand? You need to understand, because these questions nowadays, they are not like the ones some of us did. The questions are a bit tricky. They are not uniform. But if you get understanding, you will have an easy time answering these questions, right? The idea behind changing the policy, the idea behind introducing this discount is to make the customers pay so that the business will have the money. But again, you see, that discount to the business is a cost. That is discount allowed. Discount allowed is an expense. So that is one thing that is going to help us calculate the net benefit or cost. So one thing is discount. There is cost of discount. Cost of discount. All right. The cost of discount, that is a cost. There is a discount, which is a cost. That is one. you're still working out the formula, because if you don't get this one, then even the calculations are meaningless. Okay, but I want you to get understanding. The first element is the cost of discount. We must analyze the discount because it is a cost. Okay, then what will be the benefit? What will be the benefit? This is a cost to the company, but what will the company benefit? This discount benefits the customers, okay, encouraging them to pay early because they only enjoy the discount after paying early. And the business has to give a discount. Discount means the business is selling at a lower price by 1%. So it's a cost, but we are analyzing net benefit or cost. So what will be the benefit? That is the $6 million question. What will be the benefit? The benefit. What is the benefit? And if you have been listening to me, I just said it. I just mentioned it. Out of my many words, I mentioned it. All right. Any want to try that one? Frigin says, money received now is better than money received in future. Time value of money. The company can invest the money in other projects or the same. That is, you are talking business language, which is okay. There is truth in what Frigini says. As the money are received, Vincent says, as the money are received early, they will be reinvested again to more benefit. That is still okay. That is true. That is true. But I hope you've understood up to this point. That policy, the policy, someone has an answer? The company will keep on selling more products and staying on the market. That is also true. It will keep on selling more products because the debtors have paid, and that money that the debtors have paid can be used to buy more goods and also to buy and sell. The cycle continues. That is correct. Now, you've understood the discount. The discount is a cost. All right. Now look at note number 5. Madras has an overdraft bank facility charging interest at the rate of 6%. Put that at the back of your mind. Now, this company, candidates, has been selling its products, and the debtors collection period is 30 days. The company wants to change the policy so that customers can pay early. They've introduced a discount for payment within 30 days. All right. So the discount is meant to encourage the customers to pay early. So there'll be a benefit in the sense that there'll be a reduction. There'll be a reduction in the cost of holding these debtors. There'll be a reduction in the the cost of holding the debtors. Because I had mentioned earlier, when debtors keep your money, there is a cost, what we are calling an opportunity cost. So by allowing a discount, then the debtors will reduce. You will not have a large figure for debtors. It's going to reduce because they are paying. And we have seen that the current debtors, look at the extract. The current debtors or trade receivables is 2,466,000. That is the current level of debtors. The discount is meant to reduce this amount of trade receivables because they are going to pay. You understand? So that reduction is a benefit to the organization. Reduction in financing, in that financing cost. You understand? Have you understood? Because we are now want to move to calculate the cost and the reduction in financing of the debtors. Have you understood? Yes, I mentioned opportunity cost. I mentioned opportunity cost. All right, I can proceed. So, minus reduction in financing costs. So we need to get these two. Then we'll have and the 6 marks. Okay? Anything else, just workings. Reduction in financing costs. The level of debtors will reduce. Meaning, the company will not have take overdraft to finance debtors. There is an overdraft in the books. You can see there is an overdraft of 3 million. All right, there is an overdraft of 3 million. So that and that overdraft in note number 5, I told you to put at the back of your mind the overdraft. Look at note number 5. Madrax has an overdraft bank facility charging interest at the rate of 6% per annum. So if the debtors will reduce, then that value is again going to reduce. Okay? Have you understood? Can I proceed? All right. So let's begin with the reduction in financing costs. Reduction in financing costs. Now, reduction in financing cost will be equal to the rate is 6% times the reduction. You're talking about reduction. As a result of the discount, the amount of debtors will reduce. Then that reduction will apply the 6% to get the reduction in financing cost. So we need to get the reduction. By reduction, we are meaning the difference between the current policy, current debtors, trade receivables, let me use debtors, minus proposed. The debtors in the proposed policy, proposed. The difference will apply the 6%, which is the cost. Then we'll get the reduction in financing costs. So that will be the formula for calculating reduction in financing costs. So we have 6%. Do we have current data? Yes, we have current data. Look at the extract from the company's financial statements. The first item there is trade receivable. That's the current. 24 66000. The proposed, we have to calculate that input. And that is what Abraham talked about. Abraham made a comment. Abraham made a comment and said the data will be split into two. The data will be split, but whether they will be split into two, time will tell. Okay? Whether they'll be split into two, time will tell. Time will tell. So, how do we calculate the data under the proposed policy? Now, look at note number 2. It says, it is expected that on average 50% of customers will take the discount. So that is the first category of debtors. Okay? Will take the discount and pay within 30 days. And pay within 30 days. Okay? Then 30% of customers will pay within 45 days. That is a second category of debtors. Okay, 45. Then there is and 20% of customers will not change their current paying behavior and will pay within 60 days. So you see we have trade receivables within receivables. We have receivables within, is it 30 days? Within 50 days. We have trade receivables within 50 days. Then we have within, it is expected that 50% of customers will pay within 30, this is 30 days, within 30 days. Then 30% of customers will pay 45. Then there is another category within 45 days. Another category within 60 days. So the debtors, Abraham, will be split, but not into two, but into three. Those who will pay within 30 days, those who will pay within 45 days, and those who will pay within 60 days. Then we get the total. That will give us the debtors under the proposed policy. Is that clear? Can I proceed? Can I proceed? Can I proceed, Mike? Can I proceed? Yes, Vincent says yes. Yeah, we can proceed. So what is the amount of the debtors that will pay within 30 days? Now, the debtors that will pay within 30 days, we read that 50% of customers, 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 and the customers, the value of the credit sales we know is it 15 million or 150 million? 15 million. It's 15 million. 50% of customers is 50% of 15 million. %of 15 million are likely to pay within 30 days. And given that we have the credit sales and we have the, how do you call it, the debtors payment period, and the number of years, we have the, number of days. So we multiply this with the debtors payment period of 30 days over 365 days. That is the receivables within 30 days. "45 days, the percentage, is it 30%? 30% of customers will pay within 45 days. 30% of the 15 million will pay within 45 days. So we have 45 over 365. Now here we are using knowledge of ratios. How do you calculate the receivables when given the number of days and the debtors collection period and the credit sales? You need those three to calculate the receivables. In 60 days, it's the balance, because this is 50%, 30%, the balance is 20% of 15 million, 60 over 365 days. Then give me this total. You see, calculating is easy once you have understood it. Now that you understood, you see we are moving very fast. Are we clear on that, Moses? What is the receivables? Trade receivables paying within 30 days. Trade receivables paying within 45 days. Trade receivables paying within 60 days. What is the total revised? The total revised receivables. This is the total revised receivables. Kevin says the first is 6164. 616438. 616438 point what? 64.38, because that is the full amount. Allow me to just round it off to 38. Yes, 616438. Round it off to the nearest shilling. 616438. The second is 554,795. 554,795. 554,795. Receivables paying within 60 days. 493,151. 493, 551, 151. 151. Give me the total revised trade receivables. Total. The total is 1,664,1664. 1664, 384. 384. This is the revised trade receivables. Proposed debtors. That will be that is the figure we are calculating. This is a working for this proposed data, which is equal to, this is 1664 384. Then we apply on the difference, we apply the 6% to get reduction in financing cost. How much is it? 6% of the difference. 6% of the difference. Someone 48, round it off to the nearest cent, 48,097. 48,097. 48,097. That is the reduction in financing cost. 48,097. 48,097. It's about the discount. The discount, not number 2, not number 1. In order to encourage customers to pay on time, Madrax proposes introducing an early settlement discount of 1% for payment within 30 days. So the discount is 1%. This is working 1, working 2, discount. The discount is 1% of what? 1%. Look at note number 2. It is expected that on average 50% of the customers will take the discount and pay within 30 days. All right? So only 50% will take advantage of the discount. So it will be 1% of 50% times 15 million. That is the discount. Is it difficult to obtain that? English. The question is written in English. It is the discount we are told is 1%. Then you are told it is expected that 50% of the customers will take the discount. The customers are 15 million. So 50% of means times. So 50% times 15 million. 50% times 15 million times the discount rate. That will give us a discount. What is the discount? Vincent says 75. 75,000. 75,000. 75,000. So 75,000. So the net benefit or cost will be the difference. So you see what to do the difference? What is the difference? 26,903. 26,903. 26,903. 6 marks. 6 marks. 1, 2, 3. The workings, just 3 marks. 3 marks. 3 marks. 6 marks. It was easy. Easier than the one we did yesterday. This is easier than the one we did yesterday. Gaspard, correct. That is the right answer. That is the answer. Moses, we are answering question April 2024, if that is your question. And that is just part 1, Roman 1. Abraham, what did we calculate with to get 40,087? 40,087. What did we calculate with? What did we calculate with to get 40? What did we calculate with to get 48,097? DML, that is, you are thinking rightly. You are thinking correctly. The question didn't require us to advise, but your thinking is perfect. What did we calculate with? What did we calculate with 1664 to get 1664? Now, it's asking, what did we calculate with this? What did we calculate with? What did we calculate with this to get this? First of all, we need to understand we are calculating reduction in financing cost. Reduction in financing cost. That's why I took time to explain this reduction in financing cost. This needed a working, and this is the working for reduction in financing cost. The company Abraham is changing its policy so that customers pay. And one way to make customers pay, the company is introducing a discount of 1%, okay, for those who will pay within 30 days. So the purpose for that policy or introducing the discount is to enable the debtors to pay early. So for us to get that reduction in financing cost, because you need to understand when debtors hold your money, there is a cost implication. These debtors are financed by the overdraft. The company takes a bank overdraft to finance debtors. And the company pays 6%. We read that an overdraft bank facility charging 6%. So this 6%, if the debtors are many, then the company will have to incur a 6% overdraft bank facility. But if the debtors reduce, then the company will pay less cost of, the cost will be less. The rate is the same, but the amount will reduce. So as a result of the discount, the debtors have reduced from 2,466,000 to 1,664,384. This difference, this reduction, it is a reduction in debtors. So it is a benefit to the company. It has gone down. Okay? That is to say, under the current policy, before the proposal, the cost of trade receivables is 6%. Under the current, let me help you out here. Under the current policy, the cost is 6% times the current amount of debtors of 24,66,000, okay, which we got an amount. Under the proposed policy, the cost of funding trade payables under the proposed policy will still be 6%, but you see the amount has gone down from this to that. This is 64,384. So when this figure is higher than the other figure, so what you get here is 48. This is 48,097. That is the reduction in financing cost. This is financing of the trade receivables. it has gone down by 48,097. Do you understand? I got it. Moses is asking, I'm asking, why did we use 6% in calculating of reduction in financing? We use 6% because that is the cost that we are given in the question note number 5. Madrax Limited has an overdraft bank facility charging interest at the rate of 6% per annum. So the bank takes an overdraft. I mean, the company borrows money from the bank and the bank charges 6%. That is why we are using 6%. Overdraft is money borrowed from the bank to fund trade receivables. Because I said, when you have debtors in your books, there is a cost associated with the debtors. The debtors are holding your money. As they are holding your money, your operations have to continue. So what the business is doing here is debtors are holding money for 30 days, 60 days. Before they pay, the business takes an overdraft to fund its expenses. All right? Because here we are talking about working capital management. This is a question from the topic on working capital management. If people are holding your money, then you have to look for other sources so that you can pay rent, you can pay salaries, you can even buy more stock. You can imagine if you are running a shop and you have you have stock worth, say, 10 million, and you sell all the stock 10 million to debtors. You see, you've converted your money to stocks, then you have given customers the stock. So they are holding your money, 10 million. So if people are holding your money for 30, 45 days, 60 days, how will you be running your business before they repay, before they pay the debtors, before they pay? You are supposed to pay rent, you're supposed to pay expenses, you are also to pay more stock so that you can continue trading. So the money, that's why I took time to explain. You need to understand the money that the debtors are holding. Okay? If you have debtors, then the debtors are holding your money and there is an opportunity cost. Because if that money would have been used to fund the current assets and to pay for the day-to-day obligations. So what does Madrax do? The Madrax goes to the bank so that he can continue trading as these debtors are planning to pay within 30 or 60 days. That's why there is a change in policy so that these individuals, these customers, do not hold the money for a long time. To encourage them to pay, you tell them, I'm going to give you 1% discount so that you can receive your money and save on taking overdrafts. Because overdrafts come at a cost. Moses, that's why we are using 6%. And that's why some businesses don't encourage selling on credit, because selling on credit can be expensive. Like supermarkets, you don't go to the supermarket and tell them you want to be paying after 30 days. If you do that, the supermarket may not have money to trade tomorrow. And those are some of the policies we learn in working capital management. Aggressive policy, lenient policy. So an aggressive policy is where a business insists on receiving money promptly. But on the other hand, the business buys on credit.